Hi, I'm Billy Keels, the host of the Going Long podcast. Every week, I'm going to be here interviewing the absolute best in the business as it relates to real asset investing, as well as real Main Street investors. We're going to be having conversations where you can listen in, and that's going to help you to continue on your path to education so that you feel much more comfortable as well as confident in investing long distance. So make sure that you go ahead and subscribe to the channel. Make sure that you're liking it as well, because that way you can get every single episode as soon as it comes out. And by the way, don't forget to leave today's episode a 5-star review. Let's go ahead and listen to today's conversation. Welcome to the Going Long podcast. We're back once again to continue to help to educate you so that you feel much more comfortable as well as confident investing beyond your backyard. I'm your host, Billy Keels. And you know what? If you want to understand how to structure your offer and find the right financing tool for your long distance investing venture, then guess what? Today's a conversation that you're going to want to listen to until the very last word. You know why? Because today's guest is not only a consummate real estate professional with a strong experience in transactional finance as well as structuring complex real estate transactions. He also helps clients find debt and equity for acquiring commercial real estate assets, and he works with sponsors looking to recapitalize and restructure their existing assets anywhere between, hold on to your seats, $25 million to $100 million. He's a CEO as well as founder of a Party Capital Markets. It gives me great pleasure to welcome to today's conversation on the Going Long podcast, Mr. Roddrick Jones. Roddrick, welcome to the conversation, man.
Thank you for having me. Happy to be here. Happy to be here for sure.
You know what, everybody, you are going to love Roddrick's energy, enthusiasm, expertise. I have had a number of conversations with him, and he's a wealth of knowledge. So, Roddrick, it's a lot of fun to have you here, and I'm sure that the entire Going Long family is going to learn a lot from you and the expertise that you've built and all the things that you're doing across the U.S. So looking forward to today's conversation, man.
I'm happy, excited, ready.
Awesome.
Let's do this.
All right, let's do it, man. So Roddrick, as you know, here in the Going Long family, we love being able to learn more about each and every one of our guests, and we kind of do that, and they let me ask you 2 questions in the beginning. They let me ask you 3 questions in the end, and then kind of in the middle, you and I are just going to have a great conversation. Everybody's going to get to know you. So with that said, can you help us understand, where do you live in the U.S.?
Perfect. So I live in Atlanta, Georgia. It is one of those southern states right towards the East Coast near the bottom.
Yeah.
And it is where I'm from. It is where I was born and raised, and I need to get out of Atlanta. I just don't know when I'm going to get out. I just need to leave for sure.
Well, you know what? And also too, a lot of people will also known as the ATL, I guess. Many people know, and there's a massive airport there. It's got a lot going on, and yes, down in the Southeast, it is one of the most popular and productive cities in the United States. So thanks for letting us know that, Roddrick. And then I guess we also like to start things out here on a real positive note. So what is the most positive thing that's happened to you in the last 24 hours?
Last 24 hours, my wife surprised me with a beach trip because I passed my Series 65. So,
hey, congratulations, man. Congratulations. Yeah. So congratulations on that. Just so people that don't know, what is a Series 65?
Yeah, so Series 65 is the test that you have to pass in order to become a registered investment advisor, or in order to become an investment advisor. And yeah, I needed that license in order to open up the asset management component of the firm that I really want to get into. And that's just the first step, passing the test and then applying for the license and going through the process.
Fantastic. Well, congratulations, man. And well, you're going to get a nice beach vacation. So that's kind of cool. You'll have to let us know how that works out. But I'm sure it's going to probably be really fun. So, yeah, Roddrick. So listen, man, I always try my best. I get like 10 seconds or so to kind of talk about you and give your story at a really, really high level. Now, of course, we all know there's a lot more to your story than those kind of 4 or 5 lines that I talked about. So could you do me and the entire Going Long family a favor? Could you help to tell us more about you, give us your backstory, and some of the things I really know that help us get to know you even more is when you can talk to us about, what are some of the major decisions that you've made to get to this point in your journey, and then we'll see where the conversation goes from there.
All right, perfect. So I'm going to take it back to when I first got into real estate. Take it there. speed it up to where I am now. And so I got into real estate. Well, yeah, I got into real estate way back in the day. I would say in 2016 is when I first got into real estate.
So I don't know when people are listening to this, but you just said way back in the day. Usually that's at least 20 years.
Yeah, for sure. It feels super long ago.
All right, I'm going to timestamp this, but this is 2021. We'll just say we're in 2021, and he just said way back in the day. So, all right,
yeah,
Roddrick, we're having fun and we're educating. So go ahead.
Yeah, so I got into real estate 2016. I started a couple businesses before that. I was in college, did consumer electronics, social media marketing. Realized once I got out of college, I read Rich Dad, Poor Dad, and I realized I didn't need as much money as I needed to get into real estate. I'm like, oh, I really can do this with not a lot of money. I mean, I had some money at the time, but I'm like, I could have been doing this. So I read the book. I didn't have a car in Atlanta. I went to this meeting called Haves and Wants in Atlanta. And I went there and I stood up. They went around the room and said, what do you have? What do you want? And I stood up and said, my name is Roddrick Jones. I'm a wholesaler and I don't know what I'm doing. Everybody laughed and they told me I'm in the right place. And then from there, I was off to the races, riding my bike all across town to get to find motivated sellers, knocking on doors, telling them I'll buy their house. Pulling up on a bike to tell people I'll buy their house is insane, but they still believed me. People would give me rides to the train station. You know, from I'm going to buy your house. Do you need a ride to the train station? Yeah, I'll give you a ride. You know, it's just crazy. And so doing that, my ultimate goal was to wholesale. Realized wholesaling was a lot of work for not enough coins. So then I said, okay, I want to get into buy and hold. Started doing buy and hold, realized that I wanted to get 100 properties in Atlanta, 100 single family rentals in Atlanta. And then I realized that's going to be a headache because I got to drive to all of those places. And then once I drive to all those places, I have to pay a property manager and it's just not efficient. So then I found out about multifamily and I realized I can have 100 units in one place. That is what I want to do because it's like I'm still having 100 units, but they're just all at one place. I can drive to one building and bam, I'm there. I'm in the game. Mm-hmm. So I got into multifamily, same concept, didn't have experience, went online, told people, I'm a multifamily syndicator now. This is what I do. And then started gaining traction, brought some partners on, the whole 9 yards. Fast forward to 2019, that company ended up failing because I made some tough decisions or made decisions based on emotions rather than logic. And now, a party capital markets is what I'm doing now. And it's always what I wanted to do because I realized from being a multifamily sponsor, like I like the capital aspect of it more than the actual managing the property and, running the deal. I like the way the dollar works and I like the way you can put it into a deal and it can just turn into different things because a dollar is just a dollar until you put it to work. You put it to work, it can be debt. It can be equity. It can be pref equity. It can be, a senior piece of the debt tranche, a junior piece. It's so many forms that it can take, but it's just a dollar until you put it to work. And that's what I like the most about, multifamily and putting money to work. That was the biggest thing that I liked the most instead of running the property, being an owner operator. And that's how we got here.
So we got here because you understood that you actually like the currency. Right. I like to call it currency, I like to call it money, the dollar, as you said, which I think is a very good thing because you started realizing what you actually liked. And so as you tell your story, one of the things I love about the evolution or the evolution, depending on how you want to say it, right, is that you not only had the desire to find out more, so you went to this place and told people that you were there and you didn't know what you were doing and they laughed at you and you still moved forward. You then went to go tell people you wanted to buy their homes and you went on a bike, which shows a lot of humility, which I think is fantastic. You then got a taste of a number of different things. And one of the things that hopefully everybody in the Go Along family that you just picked up on what Roddrick said is he said that I made a mistake because I made a decision based on emotion, not logic, which is pretty interesting. So, I guess one of the things that as we go through this, what was it that, because you're going through this evolution and then you said that you realized that you liked the dollar. because it can transform itself into a number of things. One thing that you didn't say, but this is because my brain works in translations because I speak 5 languages. And so a lot of times I like to translate things. Would you also say that dollar can be a number of things, and it can also, when used properly and appropriately, can equate to a certain type of freedom?
100%. That is it. That is the word, freedom. That dollar equals freedom for sure. If it's used properly, it can equal freedom. If it's used wrong or in the wrong context, it can not equal freedom. But I don't know the opposite of freedom. It can equal, I don't know. Yeah, you can get yourself in a bad situation.
Yeah,
so
definitely.
It can either free you or tie you down.
Yeah, and so one of the things that we're definitely going to do today is dive into, because there's a topic here that at least I know with other guests we've not really had a chance to dive into. But one of the things I always want to get this kind of question out on the table in the beginning, and it has to do with the fact that you are in Atlanta. You have a lot of experience. You've done wholesaling and you've done a lot of that locally. You've also purchased single family residences and you've purchased multifamily. Now, have all of those always been in Atlanta?
Yes. Yes.
Okay.
All of them has always been in Atlanta, but I realized that it doesn't have to be in Atlanta.
Yeah. And so, correct. And so what you're now doing is you're helping people expand beyond their backyard. So what you're doing is you're giving them the possibility to literally go nationwide. Right. And so, which is why, and this is another thing, is how you combine the experience. You combine your local experience and be able to use that and go beyond your backyard. And that's really where we're going to focus today. So one of so you had the option to continue to invest in your backyard, but now you would do it differently. This is me saying this. And then you're also helping people to invest beyond their backyard. So help us understand here in the Going Along podcast, because that's what we do. What are some of the things that you see, or even now within your own realm of investing beyond your backyard or helping other people do that? What are some of the reasons that you find that people really want to invest in places where they don't live? Because that goes against everything that we've primarily been told.
Yeah. Some of the reasons is, one of the main reasons is maybe they can't find deals where they live. And that is one of the main reasons. 2, maybe they have outgrown the market in which they live in. Another reason is maybe their comfort zone has expanded. You know, I know when I first wanted to do it, I wasn't comfortable stepping into other markets because I couldn't see it. I couldn't feel it. I couldn't touch it. But now when you realize that, going back to the dollar, the currency or the capital, it doesn't have a space. It's not in one place. It can go anywhere at any time and do anything you need it to do. And so if the capital can do that, why am I letting my self-limiting beliefs hold me back from going into other markets? You know, I always like to say, like, when we come into the world, we know nothing, but everything that we know, we learned it. And so going into other markets, you know nothing, but you can still learn everything you need to learn about those markets. And it's just stepping outside of the comfort zone. That's the main reason, stepping outside of it.
And I appreciate that you've said that, and it's also something that you are now doing, right? Which I think is fantastic. So, and I think this is one of the things that a lot of times we say is that a lot of the growth comes outside of when you leave your comfort zone, right? So
yes.
let's bring it back to this area of expertise, which is around understanding the money, the capital, the dollar. And so there's something that you mentioned earlier, and maybe a lot of the Going Along family is not familiar with, but you talked about the capital stack. So what exactly is the capital stack? Why is that? And also, just to give us a little context, why is that something that's important as an active or a passive investor?
Yeah, this is a great question. So the capital stack is a fancy term for saying the way you put money together. And so I like to think of the capital stack as pancakes, if that makes sense. Or we'll start with pancakes and then we'll eventually transfer into an elevator. So we have pancakes. You have your typical stack. Your typical stack is when you go to a bank and you say, I want to get a loan. The bank is going to give you 75%, and then you're going to have to bring 25%. And so that typical stack means that you have 75% debt and then you have 25% equity. Bam. A lot of people know that stack because that's what you typically get. So then you have something called the full stack. And the full stack is when you can go to the bank and say, I want to get a loan and I want 50% debt. Okay. So now you're at 50% debt, and then you want to get your leverage up to 85%. And leverage meaning, how much you borrow. So if the bank is only willing to offer you 50%, that means you have to come up with 50%. You can insert something there called mezzanine financing, where they'll take you up to 85%. So start at 50, the difference between 50 going up to 85, that's where you are. And then as a sponsor, you only have to bring 15% of the capital. That's called the full stack. First is the senior debt at 50. Next is the mezzanine. Last is the the common equity. Then you have another stack that's similar to that.
Just really quickly, because I love where you're going with this. I just want to make sure that we don't leave anybody behind. Because as you introduce the mezzanine, you mentioned a word that maybe people aren't familiar with, and it's senior. So when you talk about senior, help everyone know, and also why is senior important? You may have been going in this direction, but I want to make sure that we don't lose anybody.
Yeah. So senior debt, we call it senior because it's in the most senior position. That means they're in the safest position. That's the position where you are, where, if you want a safe return and it's secured by the investment, meaning that if anything happens, the bank can just take the property back. And so senior position means that they're the first to get paid. So when money comes in, it goes straight to the loan. And then the rest of the people who's in the rest of the layers of the capital stack, that's where the money washes down to. So it starts with the senior and then it washes up to the rest of the stack.
Perfect. And the senior is typically going to be?
That's going to be your senior. That's going to be the loan that you get from the bank. And it's going to be anywhere from 50% to 75%.
Perfect. Okay.
And if you go with like A-class properties, I think you should take it down to like 40% because that helps your cash flow.
Okay, perfect. We'll get into that. That's probably the next course. But so we've got 50%. We understand these are typically going to be your larger banks and things like that. Then you talked about the mezzanine, which is that 35% in this particular pancake or crepe for our friends that are listening, because there have a lot of people that are listening to us from La Belle France as well. So when you talk about mezzanine debt, so that's not the bank and it's not the equity, which is when you're raising capital and bringing in passive investors and things like that. I've heard this mezzanine thing a lot, but what exactly is mezzanine and who are they, or what entities are they?
Yeah. So mezzanine is a term that gets thrown around a lot. You'll hear it called mezzanine, or you'll hear it called preferred equity, or you'll hear it called either one of those two. So mezzanine or preferred equity. Only thing, it's a fancy term to say it's the middle part of the capital stack. Mezzanine just means middle. So when you hear mezzanine, they're in the middle between common equity and senior debt. And so the difference between mezzanine and pref equity is mezzanine is in a second lien position. So that senior lender that we were talking about, the senior person, they're going to put a first lien on the deal. That means they're the person to get paid first. Then the mezzanine person comes in and they're going to put a lien on top of that. So that's the second lien position, meaning that if in the event of foreclosure, the senior lender will get paid first, and then the mezzanine lender will get paid second. And then after that, the common equity gets paid last.
Perfect. Now I know this is going to be a lot of different things, but it also too. So you have the first, and we're going to simplify this, and we're not going to necessarily use any names, but just kind of entity types. So you have the senior, which is the most in terms of debt. So you're borrowing money, and that's the senior. That's the most, the one that gets paid first whenever the money comes in. That is typically some type of a large bank or some type of large lender. Yes. It usually has a name that you recognize from big companies all over the place. Then you have the next layer. It can be, let's call it the mezzanine layer. And that mezzanine layer are we talking there? Is that another bank, or are these groups of people, or are these just smaller types of banks or more niche types of banks that you may not recognize them, or kind of who is that mezzanine?
Yeah. So that mezzanine piece can be a large bank, or it can be smaller banks, or it can be just private companies that specialize in putting out those type of loans. And so when you're working with banks, they just measure it based on the amount of risk and based on the amount of risk that they're comfortable with taking. Because all right, so the word is tranche. So every tranche, and tranche is the fancy term for saying layer. So every layer has different layers within that layer. And so when looking at those pieces, if you just take out the senior piece, there's something called a super senior, where it's the lowest piece of that senior piece, where you break out, the capital stack. And so to answer your initial question, the senior positions is large banks. The mezzanine positions can be a large bank, but most of the time it's going to be a smaller bank, or it's going to be a private company, or it's going to be some type of private lender that specializes in doing mezz pieces. And then the last part is either going to be the sponsor or another company that can provide the equity.
Fantastic. So, and I appreciate you going into that level of detail. A lot of times we don't necessarily, but the reason that for the Going Long family, the reason that this is important for you to understand is the question I'm getting ready to ask Roddrick, and he's going to help us. So you've helped to explain, and basically if you think about the floor, if you're standing up, that's the place where it's usually the safest because that's where your foot is. And so you're solid. The higher you go, the riskier it is that you can kind of fall over. I mean, it's maybe moving away from your pancake analogy a little bit, but just to also help people understand, the more that you go into the air, right, away from the floor, the more risk that you have to fall, right? And so you've just taken us through that. And a lot of people, they've only known, hey, I can get a loan or a mortgage from the bank, and then I put the rest of the money in. And you've helped us understand that there are different entities that have different risk profiles, and based on the risk, because they're getting further away from the ground, they are willing to take the risk reward factor. So it may cost you a little bit more in terms of the interest rate and these types of things, but you're getting access to the capital that you wanted. Yeah. Why? So then understanding that now even better, why is that really important for someone who's looking to invest with someone else as a passive investor? Maybe we'll start there first.
Yeah, that's really important because you have something called capital costs, and your interest rate, and the interest rate of the senior loan and the interest rate of the mezz loan. If you combine those, then you have your weighted average capital cost. And so you can call it weighted average capital cost, or you can call it weighted average interest rate. And so that means that, let's say you get a loan and the interest rate is 4%, and then you get a mezzanine loan and the interest rate on that is 5%. Well, if you take that, average it out, your interest rate altogether may be 4.98%. And your weighted average capital for higher leverage is, 4.98% rather than just getting 4% and only stuck at, 75%. This is important because the more leverage you have on the property, the better returns you can get for the better returns that you can achieve for your investors. However, that leverage depends on the type of property that you buy. So if it's a nice cash flowing property, you can layer that thing up with debt. And if it can service the debt, then you're in the game. If it doesn't cash flow a lot, then you should take your debt down, bring more equity to the table, and still run it that way. And then you can I'll stop there for now. Yeah, we can run it that way.
Which is perfect. So, and this is, so you just also used another term as well. So basically it's important to understand that when you're looking from a passive investor, because it also helps you in your due diligence process to say, okay, how much potential risk is there for my capital to be returned? We're just looking at through the financing lens right now, right? There's a whole bunch of other things you can look at operationally, et cetera, et cetera. But Roddrick, what you're helping us to understand is really from that, from the capital side of things. Yeah. And so when you're also looking at that, you mentioned something that maybe went over some people's head, but you mentioned to be able to service the debt. And so one of the things that you also always want to be aware of is basically how much debt do you have and how much cash flow is coming through on the property before you get to your debt service. So maybe you can talk to us about one of the other items that is also important here in terms of the way that you look at the ratios to understand whether or not you have enough capital for you to feel safe. And so maybe I'm kind of leading the question. I think you know where I'm going with it, but help us understand what is maybe a metric that you look at and why is that important as well?
Yeah. So one of the metrics that come to mind is DSCR, which is debt service coverage ratio. And it's basically the amount of times the property can pay for itself from the cash flow. So not cash flow, from the NOI. So basically to get to the NOI, you take the income minus the expenses, bam, you're at the NOI. Yeah. So once you're at that number, then you're going to, determine if your debt service coverage ratio is adequate. The number that you're looking for is a 1.25. That's the minimum that's going to get you financed across the board. If you can get a 1.25 debt service coverage ratio, you're in the game.
Yep.
Now you can go under that if you're doing a value add and you're doing bridge loans. That's a whole nother thing. But if you're doing a bridge loan, the debt service coverage ratio can go down to 1%, 1x. But for stabilized properties, we're going to do 1.25, and you'll be able to, you're in the clear to get pretty much all types of financing at that point.
Perfect. And so one of the things, I will just add one little thing, because as you were helping us to get to that NOI, or that net operating income, all the different revenue sources and expenses, specifically the operating expenses, right? Which will help everyone get to the net operating income. And then from there, it's going to, then you'll figure out what is your debt service, which is exactly what Roddrick is helping you to understand. And then the lower the number that it goes, then the higher the potential risk profile, because that basically means that there's less cash flow coming after operations to then pay the debt service. And the bigger the number, then
the safer it is, the safer the investment is. And that also determines interest rate as well. So when people say, you gave this person a 5% interest rate and you gave this person a 4% interest rate, it's all based on risk. It's all based on debt service coverage ratio. It's all based on the class. All of that goes into how much your interest rate is going to be, because it's based on how much risk the lender is taking on.
Perfect. Okay, so this is really helpful, and as I said, we're listening, and a lot of people, maybe they're thinking about going out and they want to actually make their first purchase of their first property, and they want to do a 200 unit property, right? Because they've heard that, well, you don't necessarily need to start small, you just need to get the right team, and you can invest long distance, or you're looking to be able to invest your capital with a team that you're helping. So, and I did mention in the beginning also too, Roddrick, a bit of the profile of the person or the teams that you're typically helping. But maybe if you could give us paint a little bit more of a picture, like who is the typical person that is coming to you saying, hey, listen, I need your help with this?
Yeah, that's a good question. So the typical people that come to me are, I would say it starts at the transaction size. So the minimum transaction size is going to be 20 million. So they're looking at deals that's 20 million and up. One thing that does is that's already going to take care of the senior loan position, which we have, most of the senior loans that we fulfill is between 25, really 15 to 100 million. That's what our senior loan positions really are. So most of them are looking at apartment deals or multifamily deals or commercial real estate deals, industrial deals, where they need a loan for 15 million and up. And then from there, they either need a senior loan or they need to get their leverage up, meaning that the bank will only lend them 50% and they need to take it up to 85%. Can you help me do this? And then if that's the case, then we normally take over the whole stack and we lend out up to 85% and we just layer those pieces of capital on. But most of the time they have a loan, they need a loan for 15 million, or they need, mezzanine or preferred equity for 5 million, and that's the typical client that, they're looking to do a deal. It's going to be anywhere between 1 year to 10 years, and it can be there anywhere. But most of them come to us for a loan or pref equity.
Okay, perfect. And that helps. So what is, like, just to also give people an idea, because you're doing your due diligence and understanding, okay, are we going to loan out 85%, or are we going to loan 50% or 15 or whatever the case may be, or X number of millions? What are some of the different, this may be a little bit detailed question, but I'm sure people are asking, like, okay, well, man, what kind of things are you looking at? Like, how are you evaluating whether or not you're going to give X amount of money? What kind of documents do people need to bring to you, or what kind of references do they need to have? Just paint that picture for us a little bit.
Yeah. So when coming to us, first thing we're going to look at is the deal, but I'm going to tell you high level and then we'll dive into each one specifically. So we're looking at the deal. We're looking at the sponsor or the sponsorship team, their track record. And we're looking at, do they have the net worth and liquidity to do this deal? And so the deal has to hit those metrics that I talked about earlier, has to have a certain DSCR, debt service coverage ratio, has to cash flow. And if it doesn't cash flow, how soon will it cash flow? And then next thing we're looking at is the sponsor's track record. Have they done deals like this before? So if they're coming to us for a 200 unit property, have they done a 200 unit property, or have anybody on their team done a 200 unit property? So it can be them or it can be the group as a whole. If the whole group as a whole have done, properties that's 200 units and up, then bam, they have enough track record. They have enough experience to get it done. And then the last thing we're looking at is net worth and liquidity. So do they have a net worth equal to or greater than the loan amount that they're requesting. So if they're coming to us for 15 million, they should have a net worth that's equal to or greater than 15 million. Now, if that one person doesn't have it, their team has to have that net worth. A lot of people just assume that I don't have a net worth of 15 million, so I'm out of the game. No, if you can find another person and say, will you come on my team and let me borrow your balance sheet to do this deal? I'll bring you in as a general partner. We can partner on it. And main thing that I need from you is net worth and liquidity. Can you provide that? If you can find somebody that can provide that, that satisfies that net worth and liquidity. Both of you guys will be on the loan, but they will still, that they'll satisfy the net worth and liquidity aspect of it. And then if you can hit all three of those metrics, you're in the clear. Now, if you can't, we can make introductions to people who can help you. But after we make the introductions, it's up to you to capitalize on the introduction, because we can't, make the introduction and, run the whole process for you. We want to, put you in the right space so that way you can be successful. But once we put you in the space, you have to go out and be successful and run it that way.
Yeah. And so as you are in the space, you create this space. One of the things that you just mentioned that I want everybody in the Going Long family to recognize is you are talking about one of the things that I love, which is hashtag teamwork makes the dream work. And one of the things that you just really highlighted, because people are probably thinking to themselves, well, actually, you know what, Roddrick, I don't actually have $15 million net worth, and I don't have a large enough balance sheet to be able to go and do this. And I don't have experience with doing these types of deals. Well, guess what? When you're playing in this league, especially when you're leading these types of opportunities, or you want to look to create co-sponsorship on different opportunities, the idea is, what are you bringing to the table to make sure that the team, at the end of the day, because it's about the team, that the team is able to accomplish the goal that you set out in front of you. And this is because we're talking about typically larger multifamily type of assets. Then, can you as a team, meaning you as a team, be able to do this? So, or meet these requirements.
That is it.
Which I think is fantastic. And you're helping us to see that. So I guess, before we get to the Going Long final three, and it's like time just flies by. So we're having these conversations. It's like, oh my gosh, I can't believe it. Maybe paint a little bit of the future for us. So you talked about some of the different people that you're helping. I also happen to know that you're helping people literally across the United States. But maybe tell us a little bit about who are some of the different people you're helping. What are some of the different geographies you're helping people? Just so people are like, man, I like Roddrick, what he's talking about. This sounds really great. I just don't know, because I live in such and such place, that if he's going to be able to help me.
Yeah. So I can help anybody, anywhere, at any time. And the reason I say that is because, like I said, it's just all about solving problems. And so basically what I do is solve, complex financial problems that's tied specifically to real estate. And so when I do that, any problem that comes in can be solved. It's just, do you take the time to solve it? And so I can solve anybody's problems. And if I can't solve their problems, then I'll, have somebody that I can, introduce them to who can solve it. But I work with anybody from any geographic, any location. One thing that I really want to do going forward is work internationally. I just haven't cracked the code to be able to do it yet. But once I crack the code.
And so please, Going Long family, I know if you're able to clap, or if you're driving a car, definitely do not do that now. But yeah, so we're collectively smiling and saying, Roddrick, you're pretty much in the right place, because we have an international audience today listening to you, which is awesome.
Oh, that's pretty dope. That is pretty dope. So yeah, I want to help everybody anywhere in the world. I want to really take it globally, but I know that, it's just connecting with the right people, solving the right problems for the right people, and just doing my best to help where I can help, because that's the biggest thing. It's not about the money. It's about solving the problem. The money is just a side effect that comes with it, and that's it. So I can help anybody anywhere. I typically take them through the same process. If they have a deal, I ask 5 data points: current NOI, pro forma NOI, sources and uses, debt stack, and exit strategy. If you can answer those 5 questions, I can pretty much give you a fast answer. But if you have any general questions, you can just hit me up, whatever, and I'll, answer those general questions. Even if you don't have a deal, it's all about relationships. So most people only call when you have a deal. But the thing is, you build the relationship before you have the deal. So that way, when you have the deal, it's like we're not getting to know each other on the first time, and then I have to take you through the process and try to make a fast answer based on you then. It's better just to build the relationship over time.
Can you repeat that, please?
Build the relationship, because the relationship is worth more than the transaction that we do.
Bingo. There you go. So, yeah, sorry. It was so nice you had to say it twice. Thank you very much. I appreciate you doing that. And yes, it is about building relationships, and that takes time. That is something, I mean, there are things that you can obviously do to accelerate relationship building, but it's not something that you're going to have a conversation with Roddrick tomorrow and then say, hey, Roddrick, can I get $50 million? Maybe.
Yeah, it depends.
It depends. Yeah. So, but anyway, so appreciate you sharing that with us. And the thing is, we got to get to the going long final three, man. And
all
so
right.
the thing is, and then by the way, everybody, you're going to find out how to get in touch with Roddrick. Just let us get to the going long final three, and he's going to tell you, don't worry. I know you're trying to figure out, how do we do this? So here's the thing, Roddrick, and the going long family knows this already, but since you're new to the going long family, I always like to ask the going long final three, but the thing is, I never ask anyone the going long final three until the guest. And today you are our guest until you tell me that you're ready for me to ask you. So are you ready?
I'm ready. Let's do it.
Yeah, let's do it. Let's do it. So we'll do this pretty quickly. And then everybody wants to find out more about you, how they can get in touch with you. So listen, we started with you over in the ATL, southeast of the United States, excuse me. And so you were over there, but I like bringing things back to this side of the pond, because I've been over here in Barcelona, Spain, over here in Europe I've been in Europe for almost 20 years now, which is amazing. And I always we want to know actually, what is your favorite European city, either that you visited or is still on your bucket list to visit?
Perfect. The European city that's on my bucket list to visit is going to be Paris.
Paris! Boom, boom, boom. See, this is when you were talking about earlier, les tranches, all the different layers, because that's the French word for layers, tranche. So so it's not surprising that you picked a wonderful city like Paris, and that was actually the very first place that I started here almost 20 years ago.
Oh, wow.
Amazing. Yeah, amazing place. So we'll
I'm even trying to learn French for when I go. I'm practicing on Duolingo.
Okay, well, which is fantastic. But tranche will be very good. That gets you started, but everyone's going to be like, what's this guy talking about? What's this guy? Keep going from there, man. Keep going. Let me know, and I'm happy to help as well. So listen, so that's very, very awesome. And then the second question in the Going Long Final Three has to do with people that are very successful. And like the Going Long family knows this. Like one of the things that I've always recognized in very, very successful people is that they all have one thing in common. Roddrick, and you're a very successful person. And the thing that successful people have that I've recognized is that one of the main reasons that they're really successful is because, they will only make one mistake to their way that they get to this point in success. And I've done this, I don't know how many times, and I always seem to get that wrong. As soon as I say it, I'm like, no, I get it wrong. By the way, I think it's by design, Roddrick.
Sorry.
So here's the thing. Now, the Going Long family knows this, my little joke, but the reality is people that are successful, they are just like everybody else. They make mistakes. They have learning experiences, if you want to call them that, and they probably make a whole lot more mistakes than most people. What they do differently is that they always take a moment to learn a lesson, and then they apply that lesson. And so I'd love for you to share with me and the entire Going Long family, you've made a lot of mistakes because you're a successful person. What is one lesson? Just think of that one lesson that you could share with us that you know is going to make a big impact on the entire Going Long family.
The one lesson is you're going to die. That's the one lesson. You are going to die. So everything that you think matters really doesn't matter. Everybody's opinion really doesn't matter. Everybody's, view really doesn't matter. Only thing that matters is how you look at yourself, how you view yourself, what are your goals that you have lined up in front of you, and then just going forward from there. When you were a kid and you were learning how to walk, you didn't care how many times you fell down. You just got back up. You didn't care how many people laughed at you. You just got back up. When you were learning to ride your bike, you may have ran into a bush. You really didn't care. You just got back up. So you're going to die. Don't care what other people think. Just get back up every time you fall, and you'll be all right.
You'll be all right. Get up every time you fall. Eventually, yes, that is the one thing that's going to happen to all of us. So none of us get out of here alive. So keep that in mind and continue to move forward, and don't be so concerned about what everybody else is thinking or doing. So love that. And then lastly, Roddrick, man, it's always about being able to fill up our brains before we head out of here and find out more about how people can get in touch with you. So what is the one book that you'd recommend to the Going Long family?
The one book is The Carpenter by John Gordon. It's about love, care, and serve. And I feel like those are 3 principles in life that will take you, further than anything in life ever will. If you love, you care, and you serve, you'll be all right.
Love, care, and serve, The Carpenter. Fantastic. We will make sure that we include that in the show notes. And, Roddrick, I'm just thinking from the very beginning, well, aside from the fact that, once again, congratulations on your Series 65.
Thank you.
You mentioned that you wanted to get into this real estate game. You were humble and enough to tell people that you were there. You didn't know what you were doing. You're riding your bike around town and convincing and helping people to understand that you could help them. You went from there, and then you had those 100 single family residences you had in your mind. And then you were like, well, hang on a second. I want to be able to scale, and I want to have them all in one place rather than driving all over town. And so you were able to get these things. It didn't happen perfectly. Once again, you're someone who's a successful person. And so once again, you did have an event, a mistake, and you owned that because of a decision that you made on emotion, not based on logic. And then from there, you started recognizing that, hey, listen, all this kind of stuff is cool, but I actually really like the dollar. I like the transaction. I like what this particular dollar can do when it moves. And it can even get to your point where it can do so many different things as long as it's moving. It can even help you to get to a point of freedom if you use it appropriately and with the right people. You took us through a masterclass of understanding the capital stack and the different types of tranches that are there, which ties into this love of the place that you will go into, Paris. And you're also helping people all across the United States today and are open to helping people across the globe. And I know that so many people are thinking to themselves, man, this guy's really got it going on. He knows so much, and I just got to get in touch with him. I want to find out more about how I can get in touch with him. I know someone who's as an active investor, this is great. Or, you know what, he said something, and as a passive investor, I don't know who I can ask, and I know I can build a relationship with him because he's open to that. And so help us understand, Roddrick, what is the best way for the entire Going Long family to contact you or get into touch with you and find out more about what you're doing and also what you're doing at Aparti Capital Markets?
Yeah. So you can shoot me an email at Roddrick at Aparti Capital Markets, Roddrick at Aparti Capital Markets. You can give me a phone call at 770-421-5160. You can shoot me a text at that same number. And you can also reach us on our website, www.aparticapitalmarkets.com. And you can find me on Instagram at Roddrick Jones.
Fantastic. Instagram at Roddrick Jones. Everywhere else, you can find him at Aparti Capital Markets and .com. You got your email address, and he even gave you his phone number. Be careful, man. If your phone starts blowing up, this is what happens here. So listen, man, I do want to thank you from the bottom of my heart, Roddrick, for investing your time with me and the entire Going Long family. Thank you so much, man.
Yeah, thank you for having me on. This has been awesome. You're an awesome person, and I'm very appreciative for you to share this opportunity with me, for sure.
All right. Thank you very much, man. It's part of being a part of this awesome family. So if you give me just a second also too, Roddrick, I just want to leave the last words with the Going Long family. And just really quickly, because listen, Going Long family, you all heard it. Roddrick shared. He didn't hold anything back. He even took you through a masterclass on the things that most of you may feel uncomfortable asking. And so listen, you have an amazing opportunity today to share this episode with 2 or 3 other people. Like, take your phone out of your pocket real quick and just share the episode. It makes it really easy. You can share it across so many different social media sites, send it on an email, but share today's episode with someone that you know, at least 2 to 3 people. Also, since you have your phone out already, you know, one of the things you all know I really would appreciate is an honest review and rating for the podcast. It's something that I take very, very seriously. It's something that I go through each and every week. And we are doing that, or I'm doing that, to make sure that we're bringing you the most relevant content and also being able to attract the best guests in the industry. And so once again, Roddrick, someone like Roddrick, who is here with us today, would be fantastic. So just a couple seconds, an honest rating and review would really appreciate that. And listen, I'm really looking forward to welcoming you back on the very next conversation. So until then, go out and make it a great day. And thank you very much.
Wow, don't you love hearing from top-notch experts in the field? You know, when I was getting started, I really wish that I would have had access to such experts. And even more, I wish they would have given me like a really simple list of things to follow so that I could have gotten to my goals much faster and been much happier even sooner. So that's why I've created for you the 7 things that you should avoid in order to be successful in long-distance investing. And you can pick that up really easily by going to billykeels.com/7 things to avoid. And also, if you liked today's episode, don't forget to leave a 5-star review. I'm looking forward to seeing you on our very next episode, so go out and make it a great day.